So Meta just released Q3 2025 earnings, and we're seeing a lot of mixed feelings here from investors. This video, I wanted to take the time and walk through what happened and if I would buy, hold, or sell at these levels. So Meta recently announced earnings, and there was a big hit to earnings per share. But I think investors are smart enough here to kind of figure out what was going on with the deferred tax asset. Either way, we'll talk about and address it in the next slide. But going ahead and reading some of their results, earnings per share they estimated at about $6.67, and they only got about $1.05, missing earnings by 84%. Revenue they expected 49.4 billion, and again, Meta is really good at out of all the Mag 7, they're growing the fastest and continue to do so, and beat their expectations on revenue by 4%, which gives their earnings per share down 83%, but we'll talk about that later with the deferred tax asset. And revenue was up 26% on the year. Now, going quarter over quarter, earnings per share are down that 84 to 85% range, but revenue was up 8% on the quarter. So, what caused this huge earnings per share miss? Well, it was a one time non cash deferred tax asset valuation allowance adjustment. And let me explain what blabber words just came out of my mouth here. Essentially, a deferred tax asset is a company carrying forward losses, and they can spread it out over a number of years to kind of offset those profits into the future, right? So income tax is lowered, meaning you will realize a lower amount on that tax. So what happened is basically in the big beautiful bill, they have this clause called the corporate alternative minimum tax, and that's at 15%. This is lower than Meta's traditional tax rate, and let me explain why this is important. When Meta's accumulated future tax deductions are now being applied at 15% instead of their prior rate, you need to make an adjustment to a valuation allowance because this needs to be reflected on the income statement, right? We're take a deferred tax asset sits on the assets of a balance sheet, and when you need to make a valuation allowance adjustment, you need to account for this non-cash loss. I want to point out, right? There is no bill that came to the door for $16 billion that they paid out. This is a made up accounting expense like depreciation, okay? Non-cash, made up, just to track things better. And basically, this wound up to the tune of $16 billion it hit them for. Because they will not get $16 billion worth of tax write-offs into the future to lower, that taxable income amount. So it was reflected per GAAP, generally accepted accounting principles, that they had to take a hit for this. So, like I mentioned before, I think the deferred tax asset, people really got a handle on that. I don't think that's the real reason for the stock dropping here. In my opinion, what really spooked people was the Capex. The capital expenditures through 25, and then what Zuckerberg was saying about 2026. It's like, whoa, god damn. You know what I'm saying? It's the highest spending they've ever had. First, just look at this bottom left here. Capital expenditures Q3 24 was 9.2 billion. Q3 25, almost 20 billion. Okay. 2024 total 24 billion, and year to date 2025 is at 50 billion. And the year's not done yet. We still got another quarter. Okay. Now let's just look at this in a broader picture here. CapEx as a percentage of revenue quarterly. And, 17%, there was a big spike up in 22 for 34%. I think that's when the metaverse was. And then now it's at 37% for AI, and it's only going to keep going up. So I guess what I just wanted to point out was that, they've typically, and I mean, goes to say for all Mag 7 since AI, they've always typically been an asset like capital, non capital intensive business. And a lot of the times, people would say people like Warren Buffett and Benjamin Graham would be like, man, they would have never even been able to fathom a company like this, right? I mean, those guys were investing during industrials. They weren't at the advent of software, let alone AI here. But I guess I just bring this up because I want you to think, right? This could be a significant shift in their business model with AI, right? That there could be much more capital expenditures in the short term and then obviously higher maintenance costs going forward. And, you know, I guess I get, right, that if you're a tech company, you have, like, if you want to stay in the game, you want to stay ahead of the competitor, you have to drop the money. You got to drop it. But I mean, I guess what I'm saying is 37%, man, of your revenue. A little high there, brother. But I, I just don't really trust Zuck's judgment anymore. And we'll get into that in the slides to come. So, why am I leery here of Zuckerberg's judgment? Well, there's been a couple of things, and I mean, these have all just happened in like the last 5 years alone, right? And like when you're considering an investment, you can look up to Warren Buffett if you don't want to hear from me. Management and their execution and their track history of execution is of paramount importance. And when I look at his, man, I really want to buy it right now. But what's holding me back is this track record, man. I mean, you remember like what was it last quarter when he was doing the tech summit conference and he couldn't get any of his products to work. The glasses wouldn't answer the call, wouldn't connect to the phone. I mean, Zuck's had more failures over the last few years alone that haven't even materialized and have been so expensive. The metaverse, llama, the meta Ray-Ban sunglasses, okay, are the best product they've launched internally, I guess, since Facebook. But I feel like that it's eventually going to be going down because Amazon released their glasses and all their workers are going to be using. So think of the huge market, they lost in of itself from that. I mean, the only real success this company has had has been Facebook and buying companies. I mean, nothing internal has been going on at this company super successfully. I mean, take a look at Instagram and WhatsApp, which are probably more popular than Facebook now. And it becomes apparent that they just don't have, Zuck, the team, everyone, they just don't have that creativity left internally. And they need to buy companies, and they're limited in the social sphere that they can even influence right now. I mean, when Snapchat came out, they weren't even able to buy that. Um, I don't know if I trust a lot of the data they have. I mean, I know. I just watched this really cool interview. I think it was, gosh, I can't remember his name. He's like an ex-Navy SEAL guy with a bald head, and he's really popular, and he had this interview about this guy who does like a bunch of research into the online bot community. And I mean, there is something to be said. If you are online and you're on social media, right, so I'm not lying. There are so many bots online. I bet you it's damn near 1-to-1 at this rate. Okay. I mean, it's insane. So I think eventually there's something's going to have to address with that. And I think Zuck honestly was kind of just at the right place at the right time and capitalized very well. But in my opinion, it's just clear from his last, I can't even count all the 4 fails here. He's just not as good as he thinks. And going back to that recent AI conference, man, that was just sad. Okay, I mean, and just to add on some other worries I had was that, there's been the rise of TikTok, and they've been taking up a lot of people's attention. Okay, and I'm not convinced Meta is going to guarantee to keep growing here. They don't have nearly, I mean, out of all the Mag 7, they don't nearly have the most technical note out of all of them. Okay? And with TikTok taking the market, some of the market share here, and EU privacy laws messing with the whole business model. Failed investments in virtual reality. I'd even mention that. Real AI, cloud player, Llama. The Meta glasses soon. There's been these plague of bots that we touched on. Eventually, I'm telling you, that's going to have to be addressed. And, just to play the pessimistic card here, ads are usually the first thing a company will cut as an expense after they get rid of, and lay off some employees. So, in the end, I see him spending all this money, and maybe I'm stupid. Someone please point out in the comments to me. I'm not even really sure how they're going to benefit from this artificial intelligence. Like, they're going to predict better videos for us to watch. They're going to be able to create content for companies that don't create original content. I don't even know. All right, so I always think it's good to look at the bull case too, right? If you don't analyze both sides of the argument, how can you say you really looked at things? Um, so one, I think Oracle with taking over TikTok here is they're just going to do a terrible job with it because A, they got bad talent, and B, they don't have any experience in consumer software. I mean, Google and Meta have incredible engineers, and you've seen these pay raises for to Meta to attract some of these guys. They know what they're doing. They're very pedigreed in their industry. So I think that's point one. Point two is that the family of apps within Meta has access to 3.5 billion people daily. I mean, that's insane. Okay, but I wonder how many are bots. And the amount of talent they recently hired, which I was touching on at Meta. I mean, read where some of these guys are getting poached from. Unbelievable. And, CapEx, the spikes are painful now, but they're building compute power for llama models and ad personalization. Zuckerberg did say it's very likely profitable long term. And I will give him credit that he did shut down, that water spout, so to speak, the money flowing into the metaverse when he realized that it wasn't going to produce a profit. He cut that program quick. And they had the highest growing revenue out of the Mag 7, I think, besides NVIDIA, over 20%. And just to show you, it's the cheapest mega cap here, based on forward PE and price to operating cash flow. Although, Amazon's edging them out here to the right, but I don't think this chart has been updated since the other 10% drop that happened. But Meta trading at 25 times forward PE and a 15 times price to operating cash flow. And obviously, I mean, maybe I shouldn't say obviously, maybe people have a different take, but all of the analysts downgraded. I think I have what here about 10 of them, and on average, anywhere from 5 to 10% downgrade on the stock. So I think the company is really impressive. This might be a hot take. I'm not a fan of Zuckerberg recently. I think the company really could benefit from a different CEO. But at this position, I'm holding. I do think it's going to go lower at some point between now and first quarter 2026. If it dips into that mid 500 levels, I'm going to probably be a buyer because at that point, for the growth and the size, over the long run, I think they'll recover. I just think they have some bumpy years ahead, and I think Zuckerberg's execution slipping a little bit. Just as of now, I haven't seen enough to make me believe that there's going to be a solid return on the capital expenditure investments, and based off these other products we talked about earlier. To me, if you really want to get in on a cheaper Mag 7 stock, Amazon would be the one for me.